Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting Asian session live market analysis for 30 minutes from 5 to 5:30 GMT. And today is 1st of July, so we are into a third quarter. And I'll be giving the forecast and also try to explain to you what could be the possible moves we could see in this particular week, first 1-5 of July. So this forecast is derived based on the forecast algorithm, which is statistically derived and which gives the indication what could be the possible moves during different time frames of the days in this particular week. And this is a gross forecast. The expected market moves are given with the help of this algorithm-based derivation. Then later on, it is being fine-tuned using the market reading technique, because the market may show variation with regard to the volume, and it may show the variation with regard to the type of moves depending upon the holiday, or if it is a working day, or the traders have committed more positions or less positions, etc. Normally during the week beginning, traders tend to observe the market for some time before committing the positions in a big way. So normally the small traders participate and try to take positions, and the big traders or the institutions participate whenever the data release happens or whenever they are able to get convinced that there will be big moves in the market. So we need to fine-tune the forecast algorithm derived information with the help of the market reading technique. Then still we need to use the trading strategy to limit the risk and maximize the profit. So let me explain to you the forecast part of it. So I am giving it in a different format now, in the form of a table, so that it will be easy to follow it on a daily basis. So this is the 1st to 5th of July week. This is the first week of the month and also for the third quarter. So the month beginning, trend reversal moves are expected. Namely, the trend reversal moves are nothing but the volatile moves. They will try to pretend as if the trend is down, and then subsequently they will make the upward move, or they may make the trend is up and then reverse during the rest of the weeks of the month. So that is why the first and the last week of the months you come across the trend reversal moves, and this is primarily done in order to induce the traders to speculate in the derivative market. That is, either in the options market or in the futures market. The traders will try to bet on euro is expected to go to 1.28. Somebody might take a sell there or put call, and some might say that it could go to 1.34 and try to take the call. So that is how you come across in the options market. The traders tend to bet depending upon the trend what they set during the early part of this particular month. Normally the expiry date might be of a longer time duration, like 2 to 2.5 months, or some people will try to take even short duration options. But depending upon the premium, depending upon the discount, and also how much they have to block, they take the decisions and try to take the positions in the derivative market. But invariably what happens, the players play a tricky role there. Whenever the trend becomes visible, they try to ask a premium for taking positions. Whenever the trend is not visible, they try to give it in a discount. So that we need to understand if you want to trade in the futures and options market. Now, what could be the possible moves during this particular week? Less drop and more gain moves are expected during this particular week. So obviously they are known to make the downward stop and as well as the upward stop and alternatively, and try to induce the traders to speculate to following the technicals and the fundamentals, and later on they try to trap the traders alternatively. So they induce the market sentiment and act against that of the traders. That we have to always keep it in mind. So during the early part of the week, they will try to induce the traders to develop a sentiment, and later part of the week, they will try to act against them. So this is what we expect, and also I have given it with regard to the sessions. So the dates are given here, and the sessions are given here in the column, and Japanese session, European session, and US sessions. So the session timings are also given. So the forecast focus on the timings as well as the type of moves, and which has to be fine-tuned with the help of the market trading. So during the Japanese session, just swings, narrow range swings are expected today. And during the European session, initially they might make the swings during early part of the session and later on firm up towards close of the European session. Then US session, they are expected to make initial swings in order to induce the traders to commit wrongly the positions, and later on they are expected to rise. So whenever you come across the word swing and rise, that means you are supposed to observe the type of swing they are doing it, whether the swing is near that of the low or near that of the high. When they make a swing near that of the low with a brief downward stop, and then you can try to take a buy position, and you will be able to book profit during the rise. And if the swing is on the higher side or near that of the high and brief upward stop and is seen, then later on you cannot take a sell position, because they are expected to stay above that of the initial high and continue to rise during later part of the US session. In such a case, you can do a technical trade of buy above that of the initial high and try to book profit within the session. So these guidelines are to be understood properly, so that you will be able to really narrow down your decision making. And quick decision making could be possible with the help of that. Then tomorrow they are expected to make initially a dip during the Japanese session start time and later on rise. So they will try to increase the spread between the low and the high during the Japanese session itself. Then later on quickly make a rise during the European session and start making the slide. Then US session, they are expected to make a dip and then a rise. So you come across there is a scope for either way stop-ins tomorrow, that is 2nd of July. Then 3rd of July, they are expected to make the rise and a higher level swing, and swing and firm up move, slowly make the intentional move on the upside and swing and rise during that of the US session. Then after making the quick gains intentional move, they are expected to make an extended downward move for 2 hours on 4th July, and it happens to be a holiday and the Independence Day in US, so they'll try to make a dip, induce the long holders to liquidate the position, and then start making the rise during later part of the Japanese session, and then swing at the higher level and make the slide. And dip and rise is expected during that of the US session. Even though it might be thin volume condition, they are expected to gain the levels, because you know that the BOE and ECB are expected to make the interest rate announcement, and the market is expected to react for that. Then 5th of July, swing and slide moves are expected during that of the Japanese session, and people might make enormous comments about the non-farm payrolls, and they may say that it could be less than expected or more than expected and things like that. But the players are expected to make the dip during the start of the European session and create the feel as if the data is out already, and then induce the traders to liquidate the long positions, and later on rise during that of the release of the non-farm payroll around 12:30 GMT, and continue to swing and rise during that of the US session. Then afterwards, they are expected to set the upward trending move from that of the next week. Always during that of the 2nd and the 3rd week, they make the week beginning false move, a brief downward stop, and either during the Japanese or European and US session, and then start gaining the levels. Then afterwards they will make either way stop-ins on Tuesday and consolidate and slowly rise on Wednesday. Then Thursday and Friday they will make the visible gaining moves, and then we'll be able to understand the upward trend is expected to continue. And you would have seen that last week Euro and GBP made the drop, and USDN and USDCH have gained the levels, and that could have given that impression to the traders that USD is expected to continue to gain. But that was the end of second quarter, so the players have built up the sell positions at the higher level and then subsequently booked profit and turned long, holding lower level in all the currencies. And if we refer to that of the last June, early part of June and end of June, you would have noticed that they just accumulated the buy position, gained the levels quickly and booked a profit, and again dropped the market and accumulated at the lower level the buy positions. Thereby they are making the wide range swings in the case of Euro and GBP, and slowly gained the levels in the case of USD and USDCH, and lost the levels in the case of Australian dollar and gained the levels in the case of Canadian dollar as envisaged. As I explained many times, that the commodity pairs are not going to actively take part in the rise of Euro and GBP, even though Australian dollar is a numerator currency and they are just expected to make the range bound swings here, and similarly in the case of Canadian dollar they are expected to slowly weaken it against US dollar. But in the case of majors, you are expecting the contrarian move, that is gaining the levels in the case of Euro and GBP, the numerator majors, and gaining the levels in the case of denominator currencies like USDN and USDCH. Now you can see that Euro, USDN and GBP, they are gaining the levels as a contrarian move. And in the case of commodities, they are making the USD weakening move, gaining more levels in the case of Australian dollar and less drop in the case of Canadian dollar. And so less drop and more rise is expected in the case of Canadian dollar, and Australian dollar is expected to make the wide range swings, but they are expected to gain lesser when compared to that of Euro and GBP in the course of this particular month. And you may come across that Australian dollar or the commodity pairs in general, they are expected to lead the rally and lag behind. So this time you will come across the visible moves of that nature. So if you try to bet on Australian dollar, try to do only swing trades, don't try to hold it for a long time in order to make the position trade. Whereas in the case of Euro and GBP, you can take the positions during this particular week whenever they are making the downward stop-in, and try to hold it with the help of stop-at entry to maximize the profit by mid-July. Now, see, when I was explaining the type of moves, many were asking that what could be the range in the market. So I thought that I can give the expected market range of the four majors and the two commodity pairs, so that it will be visible, or which will be more clear in terms of pips. So Euro, which is currently trading around 1.30 area, it could make a downward stop into 1.2950 area, either 66 or 53 and or 49 and things like that. They will try to hit the psychological level or come closer to the psychological level 2950 either today or tomorrow, and we could be able to see the rise going up to the level of 1.3275 area or 1.33. Then in the case of GBP, a quick downward move to 5150 area, or this is a calculated value, plus or minus 30-40 pips is the potency, and 53.75 could be the high in this particular week. And USDN is expected to make a downward stop and below that of 99 anytime. Quickly they could do it either tomorrow or day after, and later on when Euro and GBP are gaining, and later on they are expected to gain the levels to 100 and above 100. Especially once they breach 100, Last time also you would have noticed that they come up to 99 and hold it and book profit, lighten their positions and make one dip and induce the long holders to liquidate out of fear. They might think that at the highest level of 99 we have taken a buy, and they just make a quick dip so that they liquidate, and afterwards they just go above 100, and people will try to sell the psychological level 100 and induce them during the weekend to do the short covering above that of 101. So that is how they try to do it in the case of USD-Yen. So keep it in mind, which is expected to also make upward trend. In the case of CHF, they are trading around 94 area, and they could show a brief downward stop into 93.75 area, and then an upward move to 96 area is the potency. So they could gain the levels alternatively along with that of USD-Yen to 96 area. You would have noticed that they came down to 91 area and from there started gaining the levels, and they are expected to make less dip when compared to that of the rise in the case of euro. That sort of moves they are expected to make. As a result, you will find USD-CHF will also be in the gaining mode. So what you can do is, in case if you want to take positions in that, whenever they make a quick downward stoppant or a downward move and a consolidation, not breaching the low formed for more than 2 hours, once the spread increases between the initial low and the high, or the low and the high during the day to more than 40-50 pips, then you can initiate a buy, and that you can hold it to maximize the profit during the rise. And in the case of Canadian dollar, they are expected to make a drop below that of 1.05 area. If you notice carefully that they came down to 1.01 area, and from there they gained it to 1.05, and they are expected to make a brief downward stop and try to gain the levels. But the gain will be lesser when compared to that of USD-CHF. So it will be wide range, and again they will drop and gain, and later on in one go they will try to gain the levels in the case of USD-CAD and weaken it further. And in the case of Australian dollar, they could make a downward stop and below that of 0.91 anytime using any data release by tomorrow, and later on start gaining the levels. So today they will induce the traders to take the buy positions, and when they gained quickly from 0.91 to 0.92 area almost, people might think that okay, it is in the gaining mode. It has also showed a 45% positive net change, so people might think that it could make a straight upward move. Always keep in mind, whenever the trend becomes visible, the players try to play a trick. So when the traders identify the trend is up, so why not we buy here, because we missed buying it around 1.91. we thought that it could go to 0.90, so they just commit the buy positions, and later on the players are expected to hit the stops below that of 0.91 and then start gaining the levels to 93.75, 94 area. And this time you might see during the first week quick gaining moves in the case of Australian dollar, and this is mainly to gain the levels in the case of Australian dollar and strengthen it along with that of euro and GBP. It could lead initially, and later on you could come across that Australian dollar is not participating in the upward rally of euro and GBP. It might be making the sideways move. So this is with regard to the forecast. If you have got any doubt with regard to the range and also with regard to the type of expected market moves, you can ask the questions to me. I will be willing to answer. So this is a gross picture, what could happen during this particular week. Then we come to that of the market reading. In the market reading, so we note down the initial low and the high around 2:30 to 3:30 GMT, or after 3:30 GMT, we note down the initial lows and the highs in 4 majors and 2 commodity pairs and use them as the reference level for the day to identify the type of moves and also the sequence of moves, market moves. They make it during different sessions of the day, the 3 sessions of the day, Japanese, European and US session. We track the entire market using the GMT time frame. So accordingly, I have noted down the initial lows and the highs set by 3:30 GMT. In the case of euro, and we will compare it with the current level, It formed the low 1.3006 and 1.3025 was the initial high, and now they have formed 1.3032. So you can understand that they have made the swing and start gaining the level slowly, but it's not a significant gain because the spread between the low and the high is very narrow. And they cut the high and staying above that high briefly in order to make one upward move during that of the European session, as I explained with the help of the slide here. Swing, then swing and firm up, and later on swing and rise during the day. Now coming to that of the GBP, 1.5201 was the initial low and 1.5217 was the initial high, and they breached the high and formed 1.5225. Still the spread is only 24 pips. So you can understand the spread is very low, less than 40-50 pips. So there is no point in taking the positions, and they are simply handling the cross, especially the N crosses, by making small gains there. So both in the case of Euro and GBP, they made the upward move above that of the initial high and staying above that high at the current time. Then in the case of USDN, 99.19 is the low and 99.55 is the high. They are not breached either the low or the high. So since it is showing positive net change, normally we expect when Euro is gaining, GBP is gaining, we expect USDN to drop below that of the initial low, but whereas they are holding it in the middle level. This is how they try to make the contrarian move. They also try to hold the denominator currencies with lesser pip change, and numerator currencies they are expected to gain. Whenever the numerator currency is making a drop of 40-50 pips, immediately they gain about 70-80 pips in the case of denominator currencies. So this is how they try to bring in the moves in the market. And you might think that market is making USD gaining move or USD weakening move alternatively, but in between they make the contrarian move. If you use the live market code page simultaneously at a given time, you will be able to compare what type of moves they are doing with the help of the net change, and then accordingly take positions. Whenever they are making the contrarian move, you can only trade in the case of crosses. Whenever they are making the USD gaining or the USD weakening move in all the pairs, then you can try to take positions according to that of the type of moves they make. If they are making the USD gaining move, you can do sell and buy trade in all the numerators, and if they are making the USD weakening move, you can do the buy and sell trade in all the numerators. Then in the case of CHF, 0.9444 was the initial low. They breached the low by 4 pips, and they are holding it below that in tandem with that of Euro, and 94.60 is the high, and they are not breached it. In the case of Canadian dollar, they just breached the initial low 1.0511 by 10 pips to 1.0501, and the high is 1.0530. Yeah. USD weakening move is shown as such, you can see, with the help of the net change. And in the case of Australian dollar, 0.9115 is the low and 0.9175 was the initial high. They breached the high, formed 91.92 and still holding about 91.75, and they will make one more upward move to 92, 92.20 and things like that. You can buy and book profit, and later on for the next drop you try to buy. But avoid doing sell and buy trade in all the currencies, because less drop and more gain moves are expected during this particular week, and trade using your decision making abilities. So I wanted to explain more about the market reading and the trading strategy, how to decide on the entry and the exit with the help of a slide here. So market reading, I explained that 3:30 GMT we note down the initial lows and the highs. Then how to take the position. So when a currency pair is near the low, so at the moment you find the currency pair, some are near the low, some are near the high. When a currency pair is near the low and the high and not breached them for 30 minutes from the start of the session. But now this is not the start of the session, and it is going to be, it is the middle session or mid session. And the late session will be from 5:30 to 7 GMT during the Japanese session. At that time, from the start of the session or the late session, we buy near the low or sell near that of the high and close by late session as the swing trade. So we buy near that of the low during early session and try to close near that of the high during the late session. So that could be the ideal way within the session to do the trades. But if you want to take a position during that of the late session, because your time only permits you to watch the market at this given time, then you need not worry that, or you need not repent that I failed to watch up to 6 GMT. Doesn't matter. If you are in Europe, you can still watch what is the current level, whether they have formed the high or the low, whether it is near that of the high. And in your observation during the late session, when they are not breached the high for 30 minutes, you can try to take a sell, and definitely during the gap time or the session start time, you'll be able to see that closer to that of the low. But unfortunately today the spread is very narrow, so it is not ideal to take position, because if you try to take sell, you can make about 10 to 15 pips profit. And for that the stress will be more whenever that market is very sluggish. So when they make quick moves, then you try to enter into the market and try to take a entry decision. So always keep in mind that sell when the market is near the high or buy when the market is near low. So here you find USD-yen is in the middle level. The spread is good, but USD-yen is in the middle level, so it is not ideal to take. Here the spread is low. Here the spread is 20 pips. And here the spread is about 29 pips. Here the spread is good and it is near that of the high. So you see, in the case of Australian dollar, they don't breach the high during the late session. Once they form, then you can take a sell, you will be able to book profit. This is how we have to identify a currency at a given time. So not necessarily you have to trade all the time in euro or all the time in GBP or all the time in USD yen. Some people have got the fancy that I will trade only euro yen or GBP yen or sometimes euro and GBP. And you should not have any sentimental attachment to any currency pair. You have to find out whether the spread is good. Already they have made the spread. That means what? They intend to make big moves in that particular currency rather than the other currencies. And if they are making big moves in Australian dollar, that means they wanted to handle the crosses also by holding the majors and making only big moves in the case of Australian dollar. And that means they wanted to make big moves in the case of the Aussie crosses. Then the trading strategy. We keep 30 pips stop below that of the buy or above that of the sell, or a hedge order. Whichever, if the hedging facility is available, you can keep the hedge order or you can keep the stop to limit the risk. Then once the going is good, if the position makes about 25 pips profit, keep stop at entry in a buy or a sell position and remove the hedge order or the other stop to eliminate the risk. Then exit. By late session, suppose you are entered during the early session, wait till the late sessions. Suppose you are entered around 1:32 GMT, then try to close around 6:37 GMT during the late session, late Japanese session, or end of the day. Sometimes when the going is good, the stop at entry at the buy is not hit, and still you are able to trail the stop in a profit making position. Then you can hit the limit of 45 pips or sometimes 75 pips if the spread increases. Then you take profit around 75 pips or use the trailing stop. The trailing stop can be maintained 25 to 30 pips from that of the entry level or from that of the market. As a result, you will find that the position is either closed with that of the stop, the trailing stop to get the minimal profit, or the limit to get the maximum profit. The market may either hit the trailing stop or the limit order to protect the profit. So you have to do the money management here in the trading strategy. Entry you can do with the help of the market reading and also the forecast algorithm, and then try to limit the risk by keeping the hedging order immediately or keep the stop to limit the risk. And why 30 pips? You can think that why not I keep 5 pips or 10 pips, but what happens, if you keep 5-10 pips, the chances of that being hit is very high, irrespective of a pivot point or the strong calculation of support and resistance. And always that in the market people talk about noise and your stop should not be filled during that, and normally they make about 15 to 23 pips swings. So giving spread between the bid and the ask of another 2-3 pips, so that will be about 28 pips or 27 pips. Then 30 pips hedging order if you keep, the chances of that being hit is lesser. That is how it is being estimated as 30 pips. Not that there is a fancy with regard to the number. Then some of the important things, rules we have to remember as far as market reading and the trading strategies are concerned. So you have to follow the market timing with the help of the GMT time frame, which is displayed in the live market quote page, and each session identify what session we are, and each session is subdivided into early, mid and late session. I have given the session timings with the Japanese session 0030 to 2 GMT will be the early session. Then 5:30 GMT to 7 GMT will be the late session. In between will be the mid session. Similarly, here 7:30 to 9 GMT will be the early session, and 11:30 to 13 GMT will be the late session. In between will be the mid session. Then similarly, 13:30 to 15 GMT is the early session, and 19 to 20:30 will be the late session. Then in between will be the mid session. Between the sessions you come across 30 minutes time frame, and which is referred as the gap time. So for the following day, the gap time will be more than 30 minutes. Here the gap will be about 30 pips, and between the Japanese and the European, and between European and US will be 30 minutes, and US to the next day Japanese session will be around 4 hours. So that you have to keep it in mind. So each session is subdivided into early, mid and late sessions. The first 1.5 hours from the start of the session is early session. The last 1.5 hours towards close of the session is the late session, and in between time is the mid session. 30 minutes time between the session is called gap time. These timings are to be remembered well if you want to fine tune your entry and exit times. Besides times, we also need to identify the levels. So early and late sessions are good to trade the majors and the commodity pairs, and mid sessions the crosses are being handled, and crosses of the majors and the commodity pairs are being handled. So that you have to take into consideration in order to enter or exit out of the commodity pairs. Then only 2 pairs will be handled at a given time. Always keep it in mind, they will keep only 2 pairs active. The rest of the pairs will be very, very subdued. If you come across the pip changes quickly happening, then you will be able to understand they simply hold certain currencies. Only 2 pairs actively they handle it at a given time in order to make quick moves in the respective crosses. So that you have to keep it in mind. So whenever they make a bullish move on the upside move, in the case of Aussie, immediately you think that euro is also expected to go upward, you may not get it. So many people have got the tendency to take decisions like that. Suppose GBP has made a big fall, immediately they take sell position in euro thinking that it will also drop, but they may drop hardly about 20-25 pips. In the case of GBP, they would have dropped 100 pips. Similarly, when GBP is making about 100 pips rise, people might think that euro is also expected to rise. Immediately they try to take the position, but hardly it might make about 10 to 15 pips or 20 pips, and later on start making one downward stop and before making the next rise. So you have to identify the spread between that high and the low, whether it is more than 40-50 pips, and then try to identify which currency they are handling it, bet on that currency. And always before making a quick upward move, quick downward move will be seen. That quick downward move will give that indication for you they are going to make a quick upward move in that particular currency. So that is how you have to take the decision. Then gap time moves are false moves, and they make it before the start of the next session. And if they just make a rise during that of the gap time, that means they wanted to make at least 30 minutes drop during the start of the session. So if you want to do the gap time trades, then understand if they drop by, quickly book profit in the first 30 minutes or 1 hour time. And if they make a rise, quickly sell and book profit during first 30 minutes or 1 hour time during that at the start of this session. Then follow the time of the move, whether they are making the stop and for 30 minutes or extended move for 2 hours or intentional move for 2 sessions and the start of the third session. Besides, also note down the net change at a given time, whether they are making the USD gaining or the USD weakening move, and whether they are doing in tandem all the moves in the currencies or they are making contrarian moves. That you have to identify with the help of the net change. Then see the market spread, whether the spread is enough to take a position. If hardly 20-25 pips, then you can try to take a sell or a buy, but you can get only about 10 to 12 pips, because you may not be able to grab all the profit, or you will not be able to exactly sell at this level and buy at this level, because the platform might show variation, and also some of the platforms might make deep stop-ins, but they may hit only the stops below that of 1.5201. In case if the market drops to this level, in the market they may come to 1.5195, but your platform might hit the stops up to 1.5160 or something like that, and say that it is due to spread because of the freeze in the market and things like that. You have to keep it in mind. If the stops are there, they will fill it. If you keep the limit order, they may not fill it. So that is a practical difficulty, and there is no point in fighting with the other platform providers. They are not even going to give any solution, because they intend to make profit only from their clients. They cannot make profit from the market, they can only make profit from that of their clients. Then also the market spread, keep it in mind, to determine the entry and the exit. So be an opportunistic trader, wait for all these things to happen and then commit positions during quick moves, then you will be able to quickly earn money. Instead, if you, as soon as you open the platform and try to take a position, you might be simply waiting and asking so many people whether euro will go up or come down. Then in the process you may lose patience and close the position. Then later on you may see the expected move or a move against you. So don't create a situation unnecessarily for yourself of testing your own patience. So let me try to answer to the questions which are asked here. Sivaraman has got a question. Euro and GBP is gaining slowly. Is the rise before Japanese session, and what can we expect during gap time? They are expected to make a small dip and then gain during the European section. As I explained, today they are expected to gain, tomorrow they are expected to make the downward stop-int. What is ideal spread is commit a trade. The spread should be about minimum of 40 pips. And in the case of crosses, a minimum of 75 pips. Then you commit positions. Otherwise, you might come across very subdued moves. Then, can one take long position trade in Australian dollar? Now, this is the normal feel of the traders, as I explained. After the gain, they try to buy. After the drop, they try to sell. Then, when the trend becomes visible, if the traders commit positions, the players act against the traders. Keep it in mind. So, even though it might appear that Australian dollar could gain, they could gain about another 20 pips. Above that, the psychological level 0.92 or 9222 and then start making the slide again. During the next slide, you try to buy rather than buying it after the rise. You can do a technical trade of buy above that of the initial high, 1.9175 was the initial high. If they sustain there during the early part of the late part of the Japanese session and also early part of the European session, then you can buy above 91.75 and keep the stop or the hedge order below that of 91.75, that is 91.70. You can keep the hedge order, and in case if they fill the hedge and try to book profit on the downside, once they finish it as an extended quick downward move, then they are expected to make the rise again. So there is advantage of using the hedge. So either way you will be able to book profit. You will not be afraid of the market. Once the market fear goes off, then your buy position will look different from that of the sell positions, and you will always participate in the market during the upward as well as the downward move, and consistently make money irrespective of the market condition. You will not be asking so many people the question whether the market will come down or go up. If it is hedged, watch for 30 minutes. If the hedging is not making profit, okay, they have done a brief downward stop, and during that time my hedge got filled, so let me close it with a minimal loss of 5-10 pips and keep another hedging order to limit the risk. And once they start gaining the level, keep stop at entry. Whenever you keep stop at entry, they might hit the stop at entry in a few trades, and don't immediately think that it is wise to keep the stop away from that of the entry. But keep it in mind, suppose you have taken a buy here and keep stopped at entry and the market has hit the stop, look at it as an opportunity that you can even re-enter at a lower level. Instead, you feel that you are really in a hard way taken a buy position and they closed it, so it is not wise to keep stop at entry. If you think like that, and afterwards it might be difficult to take a position here, then they may drop and show a level of 1.2990, then you feel I could have just stopped out and entered at a lower level. Always accept the market moves, then you will find great opportunities will become visible. Otherwise, such opportunities will only create fear for us. Okay. During mid-session, when crosses are handled, do you use the initial high and the low concept? Yes, we always keep in mind the initial lows and the highs of the majors. And see, the initial lows and the highs of the crosses are of secondary importance, because the players, whatever they use, we have to use it. This is not any statistical understanding, it is the player's technique. So we have to use the same player's technique. They don't have any initial low and the high with regard to that of the crosses. So they handle the majors. So when it breaches the low, say for example now, in the case of Euro, they breach the high and go above, breach the high in the case of USD and go above, then they are trying to make a contrarian move of rising Euro as well as USD yen. That means they wanted to make an extended upward move, and such extended upward moves could be for 2 hours. So immediately don't go and sell whenever they make an upward stop in the case of yen crosses. That is why many people sell. I have seen it in FX rate chart. They try to sell and immediately they find 50 pips it has already gone up. So always the market gives the profit to that of the patience traders, and give the opportunities to enter also to that of the traders who have got enormous patience. See, now they are gaining the levels in the case of USD yen in the late session. So they wanted to make an upward move in both Euro as well as USD yen. You have to just understand that. And late session, you just see they will make an upward move and continue the move during that other gap time. Then towards European session, they will hold high. Traders will technically find that it has gone above that of the support in the case of Euro yen and GBP yen and try to take a buy. Then they start making the slide. Always keep in mind, there is no guarantee or no necessity for them to keep a currency active which belongs to the Asian session or European session. Say for example USD and Australian dollar, they are supposed to be active during that of the Japanese session. There is no need that they have to keep active them during the Asian session. The rest of the session keep them passive. They can make really big moves in those currencies during different sessions. Similarly, in the case of Euro and GBP, many think that when Europe starts or UK start, they are expected to make a big move, and there is no necessity. They can do it during the US session or during the Japanese session also. So if you have the preconceived idea, please understand that depending upon the traders' commitments of the position, they make the moves in the market. Could you please let me, chalk it. Oh God. When will be the month for the USD upward trend move? Yeah, USD upward move, they will try to make it in between during the early and the late month, and afterwards they will try to make the USD weakening move. That is the type of trend they are doing it at the current moment. So there is no clear-cut month which might show immediately the big USD gaining move, but it is expected to happen in the month of November before making a big upward move during the December year-end time. Then when will be the month for the and Euro GBP cross still in the range? Which way it is expected to move next? Euro GBP cross, you know that it is well handled by the players because of the pip value, and it is expected to trade around 0.85 area for some time before going to that of the 82-83 area. They are making a slight upward move and more drop in the case of Euro GBP, and keep in mind that whenever there is a quick upward move, try to take a sell. Buy and sell you can do technically for a nominal profit, not a big profit. And it is expected to go to that of 0.82 area by end of this month. Then drawn. Could you please let me know if the notes you have used here and they're available freely? Okay. There is a private note from Drawn, whether it's available, because this webinar is being recorded and it will be available in FX Street archives, and there you will be able to note down it. Then Sundram. Can one buy Australian dollar position trade? Australian dollar you can do position trade by taking buy position below that of 0.91 and then hold it for 0.98 to 1.01 area, but that will take a longer time. You should have enormous patience, or do currency conversion trade. Okay, here is the link administrator has given with regard to the archives. There, once this webinar is being recorded in a few hours, it will be displayed. You can make a note of it. It will be permanently available. You can make use of it for your reference. So I give the expected market moves for the entire week. So you can come back to the webinar again or take a screenshot of this and try to use it as a reference. And also I have given the range for you to understand. Whenever they touch the ranges, you try to take position. You will be able to really see good trading opportunities. While still use the hedging order to limit the risk. Always keep it in mind, estimated levels are just estimated levels, and the players can make stop-ins. That is part of the game. So the initial lows and the highs on a daily basis you can note down and find out whether they are taking the market on the upside or on the downside. You will be able to perceive by yourself whether the trend is up or down. Then the entry and the exit decisions I explained to you. Try to follow it. Then keep in mind the timings of the market is equally important besides the level. And see, there is a tendency for us to refer to that of the 200-day moving average, 100-day moving average and things like that. and that will be the long-term moves, but invariably we need to do a short-term trade. So when you want to do a short-term trade, look into the other short-term moves of the market, and you should not be stopped out, and you should be able to book profit. These are all the two criteria to be taken into consideration, and for that, try to use the initial lows and the highs. You'll be able to take quick trading decisions. Ultimately, quick trading decision is very important in order to make successful profit-making trades. So, from this month onwards, I'll be again giving twice a week the Asian session live market analysis. So today I have given the forecast for the week, and on the 4th of July, Thursday, I'll come back and review the forecast, whether the market has deviated from that or it is in line with that of the expectations, and do the market trading for a particular day. On Thursday, you could come across BOE and ECB interest rate announcement time. Then I'll try to give the calls for that. What could be the trading strategy one can adapt? So these are all the blog links. There the recorded webinars will be displayed, and you can make use of it. Anytime you can contact me through my email, dr@i-noindices.com, and I'll be willing to answer to your questions and help you out in taking your trading decisions. Thank you one and all. Wish you very happy trading, and see you on 4th.